You were listening to the weekly review and forecast for the week beginning Monday, the 22nd of August, 2016. Let's jump right into the markets. What do we do on this weekly review and forecast? Well, we tell you where we are on the weekly charts on all three of our indexes, including gold. Then we talk about the things that moved the market in the news this last week and what might move it in the coming week. It's important for those of you who use your daily worksheet, available to everybody who subscribes to the podcast. All you have to do is go to chartingwealth.com and sign up for it. We will send you a link to the daily worksheet. You want to make sure that you mark where the charts are on the weekly chart. The dailies you can keep up with every day, but it is important to make sure you know where the charts are on the weekly chart. Why? The weekly chart is the biggest chart we use, and all things being equal, the market tends to move in the direction of the weekly chart. Let's jump into what we see happening with the week ending the 19th of August. We have 7 weeks now of upward movement. We had a crossover back on the week ending the 1st of July, and we have seen up weeks since that week. That was actually a down week, but starting on the week ending the 8th of July, we've had 7 up weeks since then, including the past week. We see that the Bollinger Bands, we're still within those. We had been outside the Bollinger Bands in the weeks ending the 22nd and the 29th of July. We came back in, still making progress in upward movement. Derivative oscillator still gaining. It even gained a little bit of energy, not a whole lot, but continued to move up. And the MACD and the signal line are, well, the MACD is moving a little more parallel, but they still are transitioning up, so we're still in confirmed up moves on the weekly chart. If we take a glance at what happened throughout the course of the week, we can see that beginning on Monday the 15th, big up day in the market, followed by 2 down days, and then we saw an up day on the 18th. We actually broke through the Bollinger Band, through the 2-day trend line rather, going down on the 17th. 18th was a little bit of an up day, and then the 19th ended up being very much a questionable day at the end of the week where we had options expiration. I think I was calling it triple witching. Forgive me, that is in September. I am studying too far ahead for you guys, trying to get ready with a whole bunch of new stuff to come out when we hit the proprietary launch point, when we have 1,000 subscribers on the YouTube channel. So what do we see going on? The market's been slipping sideways pretty much throughout the course of the week. We've hit our highest high on Monday, our lowest low on Wednesday, and the rest of the movement was within that. We did have a down day on Friday, 0.14%. So we're in a confirmed up move on the big chart. Now let's go back to the weekly and look at the S&P 500, down 0.15%. Looks very similar, that is for Friday, looks very similar to the total market. We continue to see the Bollinger Bands. We continue to see movement inside the Bollinger Bands. We continue to see the derivative oscillator moving up, and the MACD and signal line are staying apart, but does look like the market could be topping. We shall see after it popped into the Bollinger Bands back after the movement outside on the 22nd and the 29th. We will continue to watch. Mark your charts though. Weekly is still in an up move on the S&P 500. Now if we look at what we see, very similar to IYY, we moved below the 2-day trend line on the 17th. Some up movement on the 18th, and then a doji at the end of the week, lots of indecision. We currently see that the derivative oscillator is in the negative. Of course, we rotated over, going down on the daily chart back on the 28th of July. So it's been up some since then, but a lot of sideways sliding, We've seen the same numbers repeated over and over again since about the 8th of August. All right, that is where we are in regards to the weekly charts when we look at the two biggest, our total index and our S&P 500. Now we're going to go lastly to the NASDAQ 100, that is the technology stocks. We've gone ahead and put up a weekly trend line plus the 2-day trend line still reflected on here. We see that the Market has continued to move up since the 8th of July. It's continued to really rocket up on the NASDAQ 100. It was outside the Bollinger Bands for 4 weeks inside the Bollinger Bands, with the week ending on the 19th of August. And again, we still have the MACD and the signal line continuing to move up, to rocket up pretty substantially. Like we said, on Friday, the market was down for the Qs, barely 0.03%. Now we can see a lot of sideways sliding throughout the course of the week. The technology stocks up some on Monday, down Tuesday, Wednesday, and really just dojis, hammers, and dojis throughout the course of the week. So a lot of sideways movement. We do have on the daily chart the NASDAQ 100, the Qs crossed over going down back on the 12th and went negative on the derivative oscillator back on the 17th. So again, mark your charts. We're still up pretty strong on the weekly for the Qs. So continue to watch that. Now, lastly, as far as our charts go, we're going to go to gold, which was down 0.88% for the day on Friday. What do we see happening? Well, gold rotated over, going down, started really a lot of sideways sliding. We would call it technically rotated over on the weekly chart, going down back on the week ending the 19th, this last week. If we look at the daily chart, what do we see on gold? Well, gold rotated over back on the 5th. A lot of down movement on the 5th, and then the 8th, that was a Friday and a Monday of August. Then it slid sideways since then and just kept tracking down. So remember, mark your charts on gold that on the weekly chart, we are seeing a down move now, a confirmed down move on gold. Again, all things being equal, that is the direction that gold will tend to move until it switches back over. Now, let's jump into the news that moved the markets over the last week. What have we seen happen? Well, in the UK, we've seen very interesting data. Remember how the UK was just supposed to up and burn down once the surprise pro-Brexit vote came through to leave the EU? Well, sentiment indicators may have turned a little bit lower in some areas, but hard data such as unemployment rates and retail sales have actually improved. The week's unemployment report showed that jobless rates held steady at a low 4.9% over the month. And still better, July retail sales had their best performance in not 1, not 2, not 3, but 14 years, rising 1.4% against expectations of 0.2%. Pretty darn good, huh? We'll see how the Brits continue to fare. All of that catastrophic thinking has not affected them yet. Go, UK, go. What do we see about the ECB? Well, they're worried. Their last minute show that the European central bankers are very concerned about headwinds to their economic growth as a result of what? The UK leaving and taking their money away. We'll continue to watch how that plays in. Also, you have Turkey giving the EU an ultimatum. They gave them an ultimatum this past week, saying that they need to approve their visa-free travel through the EU by Turks in October, or they will shelve the deal they struck with the EU. Most interesting. We see the oil market switching from bear to bull. That is supposedly good for the economy, that you're paying more for your gas. I guess it's good for that industry. We also see that the Feds, and that did have some negative impact on our market, since everything seems to be driven by free money and high oil prices. Isn't that interesting? But the Feds are keeping their options on the table. The Federal Open Market Committee ended up putting out their minutes this last week saying they were split on the need for a hike in the federal funds rate soon, but they're keeping all of their options open. That's what they said in their minutes. So a rate hike as soon as September is not ruled out, and a December hike is seen as more likely. So that was a bit of a drag on the markets. Now, let's talk about what will be moving the markets potentially over this next week. Not a lot of big news, not big Fed speak, those kind of things that really affect the market. Again, we talk about these events, things that are really, really bad or really, really good can have an impact, but not a big news week. We're going to see on Tuesday the 23rd, there's going to be a flash reading on the Market Purchasing Managers Index. Q2, the German gross domestic product, is going to be reported on Wednesday, along with the central bankers gathering in Jackson Hole, Wyoming. There is going to be a speech by U.S. Fed Reserve Chairman Janet Yellen, I guess chairperson or chairwoman. She's going to address them on Friday the 26th. Additionally, on Friday, the UK's gross domestic product and the U.S. core personal consumption expenditures are going to be released. Again, we hear particularly good or particularly bad news that may affect the market, but not a whole lot of things to be worried about. Like we talked about this last week when we had on a Wednesday, those Fed minutes coming out. So again, always listen up for news like that. Does not look like right now, unless something extraordinary happens, not a lot of stuff moving the market as far as news over the last week. Hey, we appreciate you being with us. We love doing these daily broadcasts along with the weekly review and forecast. If you haven't heard the Monday broadcast yet, please tune in. Be sure to go to chartingwealth.com, sign up for our daily newsletter. With that, you will receive how to read a stock chart video link, our daily worksheet, and the layout that we use at freestockcharts.com. If you want to help us out, please go and subscribe to our YouTube channel. We're getting closer every day. We're just a few subscriptions away from the proprietary broadcast we'll be able to do when we hit 1,000. We're in the 900 and somethings now. So thank you so much for that. We know thousands listen every week. We appreciate it. But our hardcore subscribers are the ones we are going to reward. Additionally, please go to iTunes, subscribe to our podcast. You have made us as high as number 6 in the world when it comes to podcasts on the stock market, and we appreciate that. And we would very much appreciate a 5-star rating and you saying something nice about us. Follow us on Facebook, Twitter, Instagram, YouTube, you name it. We will try to be there for you. Thank you so much. God bless. Take care from chartingwealth.com.